Okay, this is chapter 15 on capital structure, and you'll have one big problem on the test that you're gonna have to do a couple computations for. So what I have worked out here on the board already, which again hopefully you can see it, is the company has sales. They have sold 450,000 units at a selling price of $28.80 per unit. Then they've got variable costs. Now in this particular problem, they don't give us a variable cost per unit like they do many times. They give us just a total dollar amount. So the total dollar amount at our current level of production is $10,200,000. So if we subtract those out, we come down to our contribution margin. Our contribution margin is $2,760,000, and then that we're going to subtract out our fixed costs. So our fixed costs for this company are $1,560,000, and that brings us down to our earnings before interest and tax, or that could also be called your operating income. Then from that, though, it's our earnings before interest and tax, so now we have to calculate our interest. So if we go back to the problem tells us that there's $4,800,000 of debt at an 8% interest rate, so that's $384,000 of interest. We'll subtract that out because that again is deductible from a tax standpoint. So we have $816,000 of taxable income. The problem also tells us that they're in the 40% tax bracket. So we're going to take that $816,000 of taxable income, multiply it by the 40%, and that gives us our income tax expense of $326,400. Okay, then we subtract that out, and that leaves us net income. And maybe in your past classes you may have stopped there if you even went that far, but in this case we want to take it all the way down to our earnings per share. So our earnings per share formula is the net income divided by our common stock shares outstanding. So our net income is the $489,600. If we go back to the problem, it tells us that there's 240,000 shares outstanding, so that gives us $2.04 per share. So that's going to be one step, putting all the information in and computing the contribution margin income statement. Another step is going to say, okay, calculate your break-even point in units. So now this one we got to convert everything into a per unit rate. So our sales were already given to us in per units, $28.80. The variable cost, I had to do a little math off to the side here. I took the $10,200,000 of total variable costs and divided it by my 450,000 units to get to $22.67. Again, I had to round it, but that's okay. So that leaves a $6.13 unit contribution margin. And those, if we want to calculate our break-even point, we're saying how many units do we have to sell, knowing that we're making $6.13 per unit to cover these fixed costs. So then our formula is taking our fixed cost of $1,560,000, dividing it by the unit contribution margin of $6.13, and that gives us 254,487 units. If you really did that on your calculator, you would see it's 254,486.13 units. But we need to say, okay, we need to round that up. How many units? We can't sell a partial, so we have to go up to the next unit and say, okay, that's how many we need to sell. Then the problem will say, well, what is that in sales dollars? So the easiest thing to do is just multiply it by the unit selling price, and then we get it in sales dollars. So we would have to sell $7,329,225. And then that would be our break-even point. Okay, then I'll erase this because I don't have much board space in this video, but I'm going to leave this because we're still going to come back to this. Then it's going to say, well, what's your degree of operating leverage? So my degree of operating leverage, the formula is that it is my contribution margin divided by my operating income or my earnings before interest and tax. So again, in this problem, our contribution margin is 2,760,000. Our earnings before interest and tax are 1,200,000. So then we divide those. So 2,760,000 divided by 1,200,000 gives us 2.3. So that's my degree of operating leverage. My degree of financial leverage, the real formula is a little more complex, but we don't have any preferred stock in this computation. So really it's as simple as taking our earnings before interest and tax and dividing it by our taxable income. So then in this example, our earnings before interest and tax is 1,200,000, and then our taxable income is 816,000. So then I'll divide those. And that gives me 1.47. And again, I'm rounding, but that's my degree of financial leverage. Then it's going to say, what's your degree of total leverage? So that's my degree of operating leverage times my degree of financial leverage. So my degree of operating leverage is 2.3. My degree of financial leverage is 1.47. So when I multiply those, I get 3.38. Okay, then it's going to say, what if our sales increase? What do you think is going to happen to our earnings per share? Or what is our earnings per share going to end up being? So if sales increase, so what is our expected earnings per share? So then that tests you on your knowledge. Well, I mean, how do I know what I'm doing with these numbers? All of these numbers go back to say, well, if I had a change in sales, what would that do to, if I'm looking at my operating income or my earnings before interest and tax, my degree of operating leverage takes me down that far. So I'd say, okay, my increase times that will give me my change in earnings per share, or I'm sorry, my earnings before interest and tax. If I wanted to say, okay, well, what if I had this change in earnings before interest and tax? What does that do to my earnings per share number? Then I apply this degree of financial leverage. The degree of total leverage goes from the top line to the bottom line. So if I have a change in sales, how does that funnel down to my earnings per share? So if I take my 10% increase and I multiply that by 3.38, my estimate is that my earnings per share are going to increase 33.8%. So then, when I know that, I take my earnings per share, the $2.04, and I multiply that by 133.8%. Again, it's 100% of what it was last year, plus a 33.8% increase. So that gives me $2.73. So that's what I would estimate my earnings per share to be. If my sales go up by 10%, I'm going to estimate that my earnings per share go up to $2.73. Okay, then your final step says, okay, prove it. So we have this estimated. I'm going to write it down here though, so I have room. So we have it that it's going to be up to $2.73. So then we say, okay, well, how do I prove it? So I'm going to go back to my basic format here, but I'm going to increase some of these things by 10%. So my sales are going to go up 10%. So if I was selling 450,000, I'm now selling 495,000. That's an increase of 10%. If I multiply that by the 2880, that gives me $14,256,000 in sales. Now my variable costs, I'm just going to increase by 10%. Again, if I had it in per units, I could do it the same way that I did there and take the 495,000 times the per unit price. But because of rounding and stuff, I'm going to just do it this way. So if I take the 10,200,000 and I multiply that times 110%, that increases it by that 10%, because it's a variable cost, so it will go up at the same level as sales. So that takes that up to 11,220,000. So then I have a $3,036,000 contribution margin. My fixed costs are fixed in nature, which means they do not go up as sales go up, so they stay the same, and I will subtract that out. So then now I have an earnings before interest and tax of $1,476,000. My interest also is not going to change. Just because my sales goes up doesn't mean I'm going to then pay more interest or borrow more money. So then I can subtract out that $384,000, and then that leaves me $1,092,000. Now my tax will change because now that's my taxable income. As my taxable income changes, my tax expense changes. So I need to take that and multiply that by 0.4 or 40%, and that gives me $436,800. So then now I have net income of $655,200, and then if I come down to calculate my earnings per share, I'm going to take that $655,200 and divide it by my 240,000 shares, and I get $2.73. So that's what I estimated, just using my degree of operating leverage times my degree of financial leverage. I estimated, okay, I'm going to have a total degree of leverage that it's going to bring up my earnings per share to $2.73. I proved it by coming back to my contribution margin, putting in my increase in sales and my variable cost, adjusting, leaving all the fixed costs as they are, adjusting that tax, and then you can see that yes, it is true. If sales go up, our earnings per share will be $2.73. So then this will be what you'll have to do on your test. So again, hopefully the video is showing that clearly, that you can read those numbers. But it is going to be the biggest problem on the test, and it is a lot of different steps. So be sure to study this one.